Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap, a look ahead. So we came in this morning. What do we do, right? S&P futures are down 14. World markets getting hit again. Can we hold up? It's the third quarter. Will high beta tech get some flows? Will we hold the 21-day in some of those FANG names? Can we reclaim Friday's lows, which would be impressive? Will the small caps continue to get flows, or are we going to break 2,700 and stay out of the way? You know what? After multiple hours, or maybe first actually 10 minutes, I sent out a quick tweet to everyone saying we just had our reactionary low, meaning people who were misplaced, either sold quickly or pressed or whatever. If you want to be long versus that. Meaning, at least you have a new point of reference. Same everything, same way across the board. It could have been the spiders, it could have been the Qs, it could have been Netflix, it could have been Amazon, whatever it was. Then you saw Facebook go positive, Twitter was positive, Apple's down 20 cents. I'm like, this makes a little sense. So, I came in just long the spiders. I added to that, and I went with Netflix, early on, and had a few good trades, and I kept it simple. But, you don't have to be in 10 things to make good money, because who knew what would happen? So I wanted to stay in control. I wanted best in breed, that wasn't as loose and wide like in Amazon, but Netflix was one of them. And I kind of was just staying away from Facebook. I wasn't sure what to expect there. And Apple, because of the lower handsets in Asia and the data privacy news from the Wall Street Journal with Facebook. So I tried to just stick to a spot that I could trade and be comfortable with, and try and start the quarter off on the right foot as we have a holiday week, and I don't want to screw things up considering we just had a great half year. Well, anyway, you go to the charts real quickly, and here you are. The S&P cash, made a higher low, held above last week's low. If you simplify it, that's all you had to know. 26.91. Today, the low was 26.98. So if you bought it versus that, congratulations. If you used your 5-minute chart, it too, once it came off those lows, made a higher low here, so you didn't get stopped out. If you bought it here on the higher low, granted, if it came back here and you had your stop in and you were gone for the day, you did not get stopped out and you had a nice move. Now we'll see what happens if it opens up and gets back towards 27.32 or 27.36. That would be some resistance again. But the S&P cash was a nice barometer, and the spiders were a nice trade. Hopefully, who doesn't come out with something crazy overnight, and I would think with some flows to start the new quarter, et cetera, perhaps, you get a little follow through tomorrow, because it looked like the market wanted to be up today. It's, at 8 o'clock last night, but there was just too much overseas with, China getting crushed again and Europe being down and the whole 9 yards. But anyway, this closed over 272 or somewhere around there. I would think we can, have another dollar or so before, there's a 21-day. And listen, you have to be a surgeon sometimes to make this kind of money when you're trying to figure it out. And listen, we've had this before where you get green, red, green, red, and it just chops you up to death. And that could be going on right here. So try not to do too much by adding high and, and then ruining a good long and then pressing a short and ruining a good short if that's what you do. So either way, still hanging in there. This day I was neutral to positive and we had some follow through Friday. Last Friday night I was neutral to negative, and then it's going back and forth. And then again on the constructive side you had the Qs. Look at the size of this day. Qs had a very wide range bar engulfing day. Okay, well, not engulfing day, but just this was stronger than the last two with new flows coming in. So who knows? Maybe now it tries to fill that gap to get that out of the way. So I'm long some Qs also. Not only did it hold the low here, it took back the prior low and closed near the highs of the day. The small caps also, held the spot, and I still don't know if you could add on strength, but buying versus levels makes sense. And now we'll see what happens here. If it tries to contend with the moving averages just for some power, what's it called? Thoughts, whatever. So in the morning we're all trained to look at the strongest stocks out there to try and see what's going on, what's next. Okay, well, Facebook was the first one to go green and gave you a red dog reversal. I listed the chart and said who's going to win the 193 battle. Well, the active bulls won it, and it wound up going 4 points above it. So hopefully, if you were short on the brain, you got out of the way, and if you wanted to be long, that was your spot. And now we'll see, does it clear this spot? So again, you could buy into support, but the question is, will you get a little bit extra move? We'll find out tomorrow. Same thing for Amazon. Amazon made a higher low, didn't even get down to there. I actually tried it and just didn't stay with it. This too, we'll see tomorrow. Does this, show some power and get above and stay above 1717, or is it just red, green, red, green, red, green, and then tomorrow's going to be another red day, which, happens, or not. So that's why we're going to, see what goes on there. For Netflix, I'm long it. I like the way it reacted, stopped guys out of the 21-day, and then all of a sudden reversed up. We'll see, tomorrow, can it get above and stay above 401 to get some power back, or is it just going to, be sitting here versus a 21-day? What you could have seen here is, let me just show you something how you could have seen it on the 5-minute. Okay, so Netflix came down, stopped everyone out, made a higher low. This is when I got, pretty long it, sold it, and then I bought some back right around here. And then as I was at the gym, I'm like, oh, I have my stop in Netflix. I actually made my stop below this. So that's how traded it. And then here I'm like, you know what? I could be a buyer of Netflix. I was like 388. I said, if it's any good, it's not going to go below 387-ish, which was right here. And then I saw the Dow down like 160 points. I'm like, shit, am I stopped out? And no. So I'm like, wow, Netflix is acting well. Text is acting well. That's when I sent a text saying, hey, my gut tells me we close well. Because if you look here, this bar was here at 1150. The spiders at 1150 was 1150. Where is the spiders? It was not too far down. Okay, so let's go to this. So this was actually 115. It was near the lows. Okay, where was Netflix at 115? At 115, which is right around here, Netflix was not even close to the lows. It wasn't even below this low or this low. So that showed you the relative strength, and that should have said, hey, if I'm sitting on my desk, maybe I could buy it once it clears this spot. That's how you use the 5-minute charts with relative strength versus the S&P in the market. And then boom, it closed well. Now we'll see if we get some follow through tomorrow. Apple also, what did you do? Apple, after the initial move also, look how much off that low it was. Okay, so granted, showed some relative strength and now closed well. Apple's going to be interesting. Apple, has been trying to act better last week, and I was stayed away from it today just because of that article. But meanwhile, held above last week's low, held above Friday's low, and closed near the highs of this little spot. So, it'll be interesting if this can get above and stay above it, and then if it does, it's got some room back towards here if it wants it. I wonder if the buyback machine and the dividend machine is, more powerful than the potential of iPhones being a little bit slower, considering that they have services and all the rest that Apple has, and the PE is so darn cheap. Anyway, it's now a little bit above the 21 days, so if you wanted to play something for follow-through, this is something that might have some follow-through. Twitter also, red day, green day, red day, green day. Is tomorrow going to be a red day? I don't know, but it did hold a 21-day, and it does have a nice little bull flag, and it could go to the upside if the market wants to be a little bit stronger. This was your last breakout. This not saying it's going to break out, but buying versus the 21 days has been better. And if you had to be in something, this should be in the game to give you something, unless we're in that bizarro market again. Tesla, it said this morning it was up 20. I'm like, don't buy. I'm not playing it. It's just too much of a battleground. And it opened up 20, went down 10. Some people were like, it's down 10 off the highs. It's down 5 off the highs. Definitely got ran over today in a day that was a lot more systematic elsewhere. That's what happens with the battleground stock. And anyway, now it's loose and wide and gross. What could you have done if you were just looking at it? My rules. Does it get above and stay above a prior high? Well, if you were long it and it didn't hold 353, that could have been your out. And if you wanted to short it, some guys shorted it versus the prior high here, or when it broke this, or when it broke that. And now this loose and wide bar tells me stay the hell away for a little bit. Okay, so anyway, that's why I'm staying the hell away. JP Morgan, I did not play it, but did hold above last week's low, which I guess is a little bit of a win for this beleaguered group. Here's your 200-day. I guess if it were to get above that, that would help the S&P, which would help me with my active longs for now. But we shall see. All in all, not special. If you're in it for a little bit of follow through, just because you love JP Morgan, this little bar gets you more neutral to positive, but overall it's not acting great, so we'll see. Metals, I have no friggin' interest in. Closed on the dead lows. It's been below the 200 days since 123. Been below the 8 and the 21 days since like 125. Just, there's no thesis for it, no reason for it. I guess the end of the people figured out that if the end of the world happens, they'd rather have a 6-pack of Sam Adams and a pizza versus a bar of gold, unless you want to hit someone over the head to steal their pizza pie and same hours. But anyway, you know, I guess the whole crypto market stole the thunder from gold because the people go there for that and the juice. But that's a whole nother segment on its own. So in conclusion, you know, today, you know, is typically the most bullish day of the year, which is why I went home a little short on Friday, even though we closed on our lows, and a little long. I'm sorry, the spiders. You know, funds come in, they have to come in, you know, and it's a third quarter, so you have to put them to work. That's why also at the end of the day, when mutual funds usually have to put their buys in at the end of the day, not the beginning, so that's why you had some buy pressure. Probably have a little bit more maybe tomorrow on a shortened day. Again, if there's no crazy news from the president, I would think we'd be up 6-7 handles tomorrow. If, you know, something happens and we're down 10-15 handles again, we'll have to figure out, can we hold, and can we buy versus the lows, could we add to it and come back up? So but then later this week, you have less flows that need to come in because they were used up already in the first few days. So then you have to be definitely a bit more careful that you don't have the buy pressure from the mechanical market dynamics out there. You know, so with that said, though, you know, looks semi more, you know, neutral to positive versus neutral to negative. Tech did get a bid, which is good to see. They didn't just sell it and book the gains from the first half of the year, so money went there like the small caps. The banks didn't make lower lows, and you know, we held 2,700. We'll see what happens tomorrow. You know, I wouldn't be too big long or too big short. You know, you don't want to ruin your holiday weekend, but if you're in here and you're trading, know that, you know, today we held again and rallied pretty well with some decent constructive action, and tomorrow, typically in a small day, you might get a little bit of illiquid follow through. We shall see, because we still have, you know, room to that, you know, 27.35, 27.40 area before, you know, the shorts get really scared. And that's, you know, again, we talk about the easier bounce versus the harder bounce, so there's still a little bit of room there if you're trying to surgically, you know, trade here, which is what we do for a living. Sometimes you have to be surgical, and sometimes you just have a broad stroke. Anyway, I'm in Short Hills tomorrow, so I will have a few charts. I'll be on the radio, and you know, I'll have a note, but no videos by me. Have a great, healthy July 4th. You know, just remember the reason why, you know, we celebrate this holiday, Independence Day, and freedom isn't free. Thank someone who has, you know, provided service to this country tomorrow, this week, and every day you see them, because again, you know, we all enjoy living here, and it comes with a price, and you know, a lot of people work hard to keep us this way. Anyway, have a good night. See you tomorrow. Bye-bye.